Types of balanced funds. A balanced fund is the best combination of bonds and equities, spanning the gap between equity and debt investing. Balanced funds, also known as hybrid funds, invest in both debt and equity instruments to create diversification and prevent concentration risk. In comparison to equity funds, hybrid funds are seen to be a safer investment, as higher returns can be obtained by combining the debt and equity instruments. The type of hybrid fund you choose is determined by your risk tolerance and investing aim. The asset allocation of hybrid funds is used to further categorize them. Some hybrid funds have a bigger equity allocation, while others have a higher debt exposure. Let's take a closer look. 1. Equity-oriented hybrid funds. An equity-oriented fund is one in which the fund manager invests more than 65% of the fund's assets in equity stocks, including a variety of industries like FMCG, finance, healthcare, real estate, automobiles, etc., and the remainder in debt and money market instruments. 2. Debt-oriented balanced funds. In debt-oriented funds, the fund manager devotes more than 65% of its assets to debt securities like government securities, debentures, bonds, treasury bills, and other fixed income havens. A portion of the fund would be placed in cash and cash equivalents for the sake of liquidity. 3. Monthly income plans, or MIP. These are hybrid funds that primarily invest in debt securities. A monthly income plan, MIP, would typically include a 15 to 20 equity exposure, which would allow it to earn larger returns than regular debt funds. MIPs provide investors with a monthly income in the form of dividends. Dividends might be paid monthly, quarterly, half-yearly, or annually, depending on the investor's preference. 4. Arbitrage funds. An arbitrage fund manager attempts to maximize profits by purchasing a stock at a cheaper price in one market and then sells it in a different market for a greater price. Arbitrage chances, on the other hand, are not always readily available. At such times, these funds could stick to debt instruments or cash. Arbitrage funds, like other debt funds, are designed to be reasonably secure. However, like any other equity fund, its long-term capital gains are taxed. We hope this video has given you a better understanding of the different important variables to consider while choosing the best type of balanced fund for you. Stay in touch with us through our website www.tradebulls.in for mutual funds, related information and investing alternatives. Join the TradeBulls family by downloading our app, TradeBulls Touch 2.0, which is now available on the Play Store and App Store.